on, the other stock which is flying away in trade today is IndiGo. Remember, there are a couple of positives that are supporting the prices. Of course, crude has fallen substantially from those 100 plus levels to all the way to $85 per barrel. Plus, there was a positive brokerage commentary as well. Somit is joining us to analyze all of that for us. Somit, take it away.
Well, four reasons why Indigo has been rising in trade, not only yesterday but today also, and two of them on the cost side. First, in the cost side, if you see, rupee has strengthened by nearly 2% from its recent peak, and for an airline company, nearly 70% of its cost is dollar denominated, and whenever rupee appreciates, a domestic airline needs to spend less, and that's how they benefit by rupee strengthening. Now, the second factor is crude. Now, fuel cost account for nearly 40 to 45% of the total cost for an airline company, and Brent Crude, which is the Asian benchmark for oil, has slipped nearly 14% from its recent peak, which will eventually lead to lower fuel prices and thus benefit an airline company. On the revenue side, if you see, according to Credit Suisse, yields which measure the average fare per passenger per kilometer, now that has increased by nearly 17% in the third quarter of FY23 because of lower capacity and higher demand, and this is 17% higher compared to what we had seen in the first half of FY23. So this will benefit the revenue. Along with this, the recovery in domestic air traffic has also been pretty much strong. If you see, so far in the third quarter of FY23, on a daily basis, nearly 3.75 lakh passengers have been flying as compared to 3.28 lakh that we had seen in the second quarter of FY23. So that's a rise of nearly 14%. So 17% rise on the yield side, 14% rise on traffic, and 14% cost benefit and 2% rupee appreciation are the factors because of which Indigo is also expected to report profits in the third quarter of FY23.